Investment. Imagine waking up one morning, checking your paycheck, and seeing that Uncle Sam no longer takes a cut of your hard-earned money. Sounds like a dream, right? Well, former President Trump is proposing a plan that could make this a reality, eliminating income taxes. But before you start daydreaming about all the purchases you could make or the debt you could pay off, it's important to understand what this plan really entails and what it means for your finances, your community, and the broader economy. Today, let's break down the plan, the opportunities it presents, and the pitfalls you need to be aware of. Trump's proposal to eliminate income taxes is a financial idea that instantly grabs attention because it directly impacts one of the most personal aspects of our lives: the money we earn. For decades, income tax has been a consistent part of American life, shaping how households budget, how businesses plan, and even how individuals think about work and investment. The prospect of completely removing this tax is, for many, an almost unbelievable opportunity to increase disposable income. Imagine receiving your paycheck and not having a portion automatically deducted by the federal government. What used to feel like a routine obligation now becomes extra money in your pocket. That extra cash can be transformative. People could pay off debts faster, increase their savings, invest more in stocks or real estate, or even fund personal projects they had previously postponed. For the average worker, the immediate benefit is obvious: more control over personal finances. At the same time, the simplicity of the plan is appealing. One of the biggest frustrations for taxpayers is the complexity of filing returns, calculating deductions, navigating tax brackets, and worrying about audits. Eliminating income taxes removes all of that uncertainty. Instead of worrying about whether a mistake on a tax form could trigger penalties, Americans would have clarity and freedom over their earnings, beyond individual relief. There's also the argument that removing income taxes could stimulate broader economic activity. When people have more money to spend, businesses benefit from increased consumer demand. Restaurants, retail stores, and service providers could see higher sales, potentially creating more jobs. There's a ripple effect. More income in consumers' hands can lead to more transactions, which can then fuel economic growth. However, it's important to realize that while this proposal looks exciting on paper, it's also highly disruptive. Income taxes fund critical government functions, from Social Security and Medicare to education, infrastructure, and national defense. Cutting out this revenue source raises important questions about how essential services would be maintained. Would there be higher reliance on other taxes like sales or property taxes? And could some programs face cuts or restructuring? These considerations are crucial because the immediate benefit to individual paychecks may come with trade-offs elsewhere in society. Ultimately, the plan's appeal lies in its promise of financial freedom and simplicity. It touches a core desire of every working American to keep more of what they earn. But like any bold financial policy, the real impact depends on execution, complementary policies, and economic adjustments. For the individual, it's exciting to think about how you might use that extra money, investment. But understanding the broader picture ensures that you're not blindsided by the consequences that could accompany such a dramatic shift in the tax system. This isn't just about more money. It's about how that money interacts with the economy, public services, and your long-term financial strategy. Eliminating income taxes would have profound effects, not just on individual paychecks, but on the entire U.S. economy. At first glance, the idea seems like a win-win. People keep more of their money. Investment. Businesses see more spending and the economy grows, but the reality is far more complex. Income taxes are a major source of federal revenue, funding essential services like Social Security, Medicare, infrastructure, and national defense. Removing them would create a significant gap in government funding. The question then becomes, how does the government compensate for that lost revenue? One possibility is raising other forms of taxes, such as sales taxes, property taxes, or corporate taxes. Each of these options comes with its own set of challenges and potential consequences. For instance, increasing sales taxes disproportionately affects lower income households, while higher corporate taxes could slow business investment. From a macroeconomic perspective, eliminating income taxes could have both stimulating and destabilizing effects. On the positive side, people would have more disposable income to spend, save, or invest. Investment. Increased consumer spending could boost business profits, leading to job creation and potentially higher wages. Entrepreneurs and investors might feel more confident taking risks. knowing they can keep a larger portion of their earnings. This could lead to increased investment in stocks, real estate, or small businesses, all of which can further fuel economic growth. In theory, the economy could see a surge in activity, with more people engaging in commerce and more money circulating through various sectors. However, there are also risks. Without income tax revenue, meant the government may struggle to fund essential programs, which could hurt public services and social safety nets. Education, healthcare, infrastructure meant emergency response programs might face budget constraints or require alternative funding strategies. Additionally, the sudden influx of disposable income into the economy could lead to inflation if the supply of goods and services doesn't keep pace with increased demand. Inflation erodes purchasing power, and which could partially offset the benefits of tax elimination. Another concern is wealth distribution. Income tax cuts tend to favor higher earners more than lower income households' investment, which could exacerbate wealth inequality. While everyone keeps more money, the benefits are disproportionately larger for those who earn more in the first place. This imbalance could have long-term social and economic consequences, influencing everything from housing markets to investment patterns. In short, while eliminating income taxes could provide a direct boost to personal finances and stimulate economic activity, it is not without trade-offs. The government would face significant funding challenges, potential inflation risks, and broader societal impacts. Understanding these economic implications is crucial for anyone evaluating the proposal. It's not just about more money in your pocket. It's about how the economy adapts, how essential services are funded, and how financial opportunities and risks shift in response to such a dramatic change in taxation. No major policy comes without its critics, and Trump's plan to eliminate income taxes is no exception. While the idea of keeping every dollar you earn is undeniably appealing, there are serious concerns and potential risks that must be considered. First, the most obvious criticism revolves around government funding. Income taxes are a cornerstone of federal revenue, supporting programs that millions of Americans rely on daily. Social Security, Medicare, public education, and infrastructure projects all depend on consistent funding. Eliminating income taxes without a clear sustainable alternative could lead to budget shortfalls, forcing cuts to vital programs. For many Americans, this could mean higher out-of-pocket costs for healthcare, reduced quality of public education, delays in critical infrastructure repairs. The immediate financial gain from higher take-home pay might be overshadowed by these long-term consequences. Another risk lies in fairness and wealth distribution. Income tax cuts often benefit high earners more than middle or lower income households. While everyone keeps more money the percentage increase in disposable income tends to be much higher for those who already earn significantly. This raises concerns about growing inequality. Critics argue that while the wealthy might use the extra money to invest and grow their wealth even further, middle-class families may see only marginal gains, and especially if government programs they rely on are cut to offset lost revenue. In other words, the policy could widen the economic gap instead of creating universal prosperity. The plan also faces political and practical challenges. Passing such a sweeping reform would require navigating complex legislative processes, intense debate, and potential opposition from those who argue it is fiscally irresponsible. Even if the law passes, implementation could be complicated, requiring adjustments in payroll systems, state and local tax structures, investment, and financial planning strategies. There is also the risk of loopholes and unintended consequences. For example, without income taxes, governments might increase other taxes or introduce new fees, shifting the burden in ways that could disproportionately affect certain groups. From an individual standpoint, these criticisms highlight the need for careful financial planning. Relying solely on the promise of tax elimination could be risky. It's essential to prepare for multiple scenarios, whether that means having a stronger emergency fund, diversifying investments, in investment, or understanding alternative tax obligations that might arise. The reality is that bold economic policies often come with trade-offs. While the idea of a tax-free paycheck is exciting, then the broader implications, budget cuts, potential inequality, and unforeseen regulatory changes cannot be ignored. Ultimately, this plan forces Americans to weigh immediate financial benefits against long-term societal and economic risks. It's a reminder that in personal finance, as in public policy investment, there's rarely a solution that comes without complexity or consequences. Understanding the criticisms and risks allows individuals to make informed decisions and adapt strategically, ensuring that they are prepared for any outcome the future may bring. If Trump's plan to eliminate income taxes were to move forward, it would present a unique set of opportunities and challenges for everyday Americans. Investment. The most immediate impact is straightforward more money in your paycheck. That extra cash can be used in countless ways: paying down debt, building an emergency fund, investing in stocks or real estate, or funding personal projects you've been postponing. For individuals who have been struggling to make ends meet, even a modest increase in disposable income can provide a significant financial cushion. It allows for greater flexibility in budgeting and can reduce stress associated with meeting monthly obligations. However, preparing for this potential change requires a strategic mindset. First, it's essential to strengthen your financial foundation. High interest debt, such as credit card balances, should be prioritized for repayment. By using additional income to reduce debt, you not only save money on interest, but also improve your overall financial stability. Simultaneously, building or maintaining an emergency fund becomes even more important. While a tax-free paycheck may seem like a windfall, economic conditions or policy changes could create uncertainty. Having a safety net ensures you remain prepared for unexpected expenses or shifts in government funding. Another practical consideration is understanding how other taxes could be affected. Eliminating income taxes may lead to adjustments in sales taxes, property taxes, or corporate taxes as the government seeks alternative revenue sources. For example, if sales taxes increase, discretionary spending may feel less impactful than anticipated. Investment property taxes could rise to compensate for local budget shortfalls affecting homeowners. Being proactive in reviewing your financial obligations and anticipating potential changes can help you adapt smoothly without disrupting your lifestyle. Beyond immediate financial adjustments, investment. This plan encourages individuals to take a more active role in long-term wealth building. Without income taxes, you have an opportunity to accelerate investment strategies, contributing to retirement accounts. Investment. Diversifying your investment portfolio and exploring business ventures become more feasible and potentially more profitable. It's a chance to shift from merely surviving paycheck to creating sustainable financial growth. That's a good investment. Planning carefully and making deliberate decisions about where and how to allocate extra funds will determine whether this policy translates into genuine financial empowerment. Finally, knowledge and preparation are key. Staying informed about legislative developments, potential tax reforms, and economic trends allows you to respond quickly to any changes. It's not just about enjoying immediate benefits. It's about leveraging the opportunity to strengthen your financial position for the long term. By being strategic, cautious, and forward-thinking, individuals can maximize the advantages of a tax-free income while mitigating risks, ensuring that they are prepared to thrive in a new financial landscape.